So in my last video, we talked about trading range, and we seen the decision being made, right? So let's talk about that decision, right? So as the market was consolidating for the past 3 days, we have this day, this day, this day. Talking about these 3 days because the prior day was a trending day, right? So the market came down from a much higher level, right? Found support, and then it remained in the trading range, right? So why did the market break out? Well, okay, we've seen signs of buying, right? So if you look down here, we see point of controls, right? The point of control is continually rising up. Look at this. This point of control, get my cursor, it's at this level. I'm looking to the right, I see 24, right? I mean 24 pips, right? And then the next day, point of control comes up to 42. And the following day, it goes up to 50, right? And I'm also seeing a volume, my value area increasing too, right? Let's see, this day it was pretty low, right? And the next day it increases, and here. So what does that mean? Well, the value area is overlapping. Well, that means potentially the trend is changing, right? But I'm also looking at my selling tails and my buying tails, right? So down here, see how we have a poor low? Okay. So I know that there is a chance of the market, coming lower, but look at this day, right? I see those two little M's, right? So somebody bought there, right? And somebody bought here, but it wasn't very strong, right? So the next day, somebody bought here, but it's only a single print, okay? And X, somebody bought there, right? Now, ideally, you will want to catch the market down here, right? So, but we don't really see that hard of a buying or selling tail down. Like we see here, so you could have caught this move, right? And maybe this doesn't always occur, and it could always be because the professional interest generally they're more interested in shorting a security rather than buying it, right? Because you think, okay, retail just loves to buy, right? Think of your grandpa, he buys stock like 4 years in the past, and then he gives it to his kids, right? That's the attitude of retail traders in general. Common stock, momentum traders, they love buying. Generally, they don't know when to take profit, basically. That's what it comes down to, right? So here, okay, the market, it traded efficiently here. So I know there's going to be reaction. It's going to be quite strong because we all know from, trading range is that the longer that a market consolidates, well, the bigger the breakout, right? So we have basically 3 days of consolidation, and then we have a couple days it breaks out, but it also comes into another trading range here. But if you look left, you'll see why, right? Because we have problems over here, right? So of course it makes sense, right? But you can see the market is continually coming out higher, right? If you're getting my drift, right? So basically, look at it this way. So the market has accepted this area of price, and now it's going to reject it. So something has changed come, May 22nd? So there was a change in the market from May 22nd versus May 21st. Okay, so that change is now supply and demand. Okay, so where's my supply? We see selling on May 22nd. We see the selling tail, right? And now the next day, it's been moving higher. Right, so because this is what I'm calling a high volume node, right? And if you say, okay, composite profile, we'll take these 3 profiles and add them all up, and your point of control, I bet you, is right about here. Just eyeballing it, right? Okay, so now, where's the point of control moving again, right? So that May 22nd closes, this day, point of control is here. And value area, now look, okay, if you see a move up, and it's quite a strong move up, and it has volume, wouldn't you think that's a start of a shift in the market? Like, I'm talking about a trend, but I'm not talking about a trend in the traditional sense that you and I may have initially learned, okay? So, see that gap between the value areas? What's different about it, right? See this day, overlapping, overlapping, and then all of a sudden, look, we have a gap of the value areas, right? So look at it this way. Okay, the market came up, it probed this area, but we don't really know if it's going to be accepted till basically the end of the day. And look, now we have volume. So if you were bring back to my example with the Lamborghini, so like, okay, you're selling a Lamborghini for 120 grand here, 140 grand here, 160 grand here, but look, you got volume, right? So what salesman would want to increase the price when you're getting higher prices? Of course you would, right? So now if we had this, okay, so let's back up one day. Okay, who wants to buy a Lamborghini for say $130,000? Well, like one or two people, because look at that selling tail, and then the market comes back down. It's not ready for it, right? The next day there was a shift in the market, right? And look, boom. Okay, now we have volume at higher prices, right? So what we got? Supply and demand. Okay, so where's my supply? Where's the sellers, right? Okay, cause versus effect. Okay, look, here's my cause. It built a cause. It efficiently traded this whole area, and the effect is this. Short-term effect, right? Effort versus result. Volume, okay? Volume, right? The effect is price. Price is just the advertising mechanism. If you were buying bananas, say on Monday, and you had to say a certain price, and then all of a sudden you knew that there was going to be a sale on in the later part of the week, what would you do? Right? If you know that there's buyers or sellers coming into the market, you know that price is, in a sense, it's fake, right? Because you know that there's volume behind it, right? You know there's volume happening, right? Even though it hasn't happened yet, you know there's future volume. You know what I mean? Like if you knew a sale was going to happen and you worked your Loblaws or whatever, right? And you knew bananas growing on sale in a couple days, right? So don't think of price as like leading the market, right? It's like you got to consider time and volume context, right? So trend is not that hard to gauge, right? So, okay, so the trend is fresh, right? Because the market has just broke out and now it's accepting this price.